Hello and welcome to Charting the Markets. You're with me, Sean Murison, Senior Market Analyst at IG South Africa. Today's economic calendar is relatively light, but we do have that weekly unemployment claim starts coming out of the US, and we do have an FOMC member, Barkin, speaking later on in the afternoon. And of course, it is ongoing US earnings season, with perhaps Philip Morris, the one to watch there today. Looking at some charts, and let's start off with the US dollar basket. We've been talking about this inverse head and shoulders, which was hinting at a short to medium-term trend reversal, and that has worked out quite well. Obviously, the inverse head and shoulders being shaded in grey. We've had our upside breakout. We had a bit of a consolidation, then we've had that continuation, and we have now realized that initial target at 103.80. We're finding a bit of resistance. We did break slightly above that, but we are in overbought territory, and we do have a bit of this candlestick reversal. So I think in the short to medium term, trend bias, traders might consider keeping a long bias to trades, although looking for a pullback, which has started to commence. And we can argue that today, so far, not much direction, very short-bodied candle, but we do have this reversal in play, and it is from overbought territory. You know, when we look at these oscillators like a stochastic, which is what we're looking at on this chart here, they tend to be less reliable as signals to trade against or to go short when they are hovering in overbought territory or prolonged state of overbought, which is what we have here. So thinking either a sideways consolidation or a bit of a pullback, but not an indication to go short. Preference for me is to wait for any type of weakness to go long. Hoping to see a pullback maybe towards that 103.25 odd mark, which is where my mouse pointer is there. And then looking to find a long entry and targeting me back up towards that 104.26, being that initial high. If we get through there, maybe even 104.60. So a short-term pullback, but that trend bias, for me at least, is to the upside at this point in time. Now, when you look at the euro dollar, we had a similar picture inverse. Obviously, euro having a strong weighting in that dollar basket or that dollar index basket price. We had this head and shoulders formation. We've had this move lower. You could argue that there is a bit of a broader consolidation on this chart, and we have found some support, although with a false break of this 107.55 level. I suppose if you did have that level lower on those wicks, then you wouldn't see the breakout. We are rebounding from oversold territory in this regard, but again, we've got this indicator, this stochastic laboring in oversold territory. So I prefer to see a quick move in and out if I'm looking at trading an oversold signal. This one has been a laboring within that. And if I look at the candlestick action at this point in time as well, we'd say that, well, these two green candles, and now we're on our third, haven't been strong enough to erase the losses just from that one single red candle. So it would suggest that you know, maybe still a bit of a negative momentum here, suggesting a little bit of dollar strength and euro weakness. But if you are a range trader and you're looking purely at the levels, then you might consider long. But for me, I'd be a bit nervous getting long at this point in time. I'd rather see where this rebound from oversold territory takes me. Could have a level maybe somewhere there in the middle, about 1.08325 odd, and look for a reversal for there to look for short entry and a retarget of the low, and target me back towards that 1.0724, which is the lows of these wicks, or 1.0755. We had to start to consider long bias to trades again is actually just a bit of a stronger move out. See it gain a bit of momentum and maybe move above that 1.0894 mark, this resistance level that we have here. So moving on and looking at cable, sterling versus the US dollar. Now we've had this uptrend in place. We've had this consolidation. While we had that consolidation, we're considering range trading type environment. Now we have had a break, a downside break of support of that range. Now that downside break is still relevant. When I look at downside breaks like that, I might have a stop loss sitting somewhere in the middle of that range while targeting move lower. We are starting to rebound again from oversold territory. This actually looks like a bit more of a reliable type oversold signal because it's just a quick dip in and dip out. But that breakout still remains relevant, and provided that we stay below this 1.268. So I'd say that downside breakout failed. If we do manage to close above that level, not short already, it might look for a bit of a bearish reversal into this move higher on a short position, targeting a move back down to retest that low at 530 if you're looking at the bodies, or maybe even that 1.2524 mark if you're looking at the lower wicks. Moving over to some indices now, and starting off with the volatility index. Just a quick look at that. This is a weekly chart. All the other charts that we have been looking at have been daily charts, but just showing you that volatility is cyclical in nature, and we are sitting at cyclical lows at this point in time. We are sitting at those levels not seen since early 2020. So really is a low period of volatility for markets right now, but is looking oversold, and there is, I think, more upside risk than there is downside risk right now on volatility. It's certainly something to watch, because obviously volatility tends to move quicker when risk is taken off the table, and we have seen a risk-on environment at this point in time. So one to watch just going forward. Now, looking at US tech, that's been all the action has been for the last year or so. Outperforming index, that trend is still firmly up. That index is still rallying quite firmly, making new highs just yesterday, in fact, and now hovering around those levels now when we look at the futures in this point in time. But this is a cash product. We've had that upside breakout. As we move into new high territory, I've just used this upward trend line just to provide a further target, and it is subjective in terms of how quickly it gets there, but sitting in somewhere around about 18,115. For me personally, this short-term move does seem a little bit overextended. We are sitting in overbought territory. Not for me a signal to trade against that trend, but certainly an indication that maybe we could join this trend at slightly better levels. So my approach here would be looking for a bit of short-term weakness to join this longer-term uptrend, and looking for maybe a pullback towards at least at 17,330 level, preferably 17,110. So 500-600 points from where we are, and looking for that pullback to end with a bullish price reversal. Not to say we can't go higher now. It's just if we're looking for entries into that index, for me, prefer waiting for a bit of a pullback from overbought territory. But certainly not looking to trade against that trend and enter new short positions in lieu of that longer-term upward momentum. And those principles do apply when we look at the S&P 500, and obviously a lot of stocks are dual listed between those two indices, that NASDAQ, a lot of the heavyweight tech stocks, of course. Long-term trend is firmly up, but we are laboring in overbought territory. So preference here again is to look for a bit of a pullback from overbought territory to find a long entry, not to try short the tops, and looking for that initial level of support sitting about into the historical level about 4,815. I think might be a bit of healthy here, rather than chasing the market at current levels. Again, we're sitting in overbought territory. That indicator is laboring in overbought territory. Again, so it's not a high conviction move. Another way it could correct is the price just moves into a bit of a sideways consolidation at this stage rather than pulls back. And you'll see that stochastic or that oscillator move back into or out of overbought territory as well. Longer term target, again, we've looked at this. We could probably look at somewhere. So if we just zoom down there, 5,100, 5,120. All right, so moving over to Europe now. Germany 40. Now, we are finding some resistance at this sort of new high territory at this point in time, and we do think the longer term trend is up, but I'd argue that over the short to medium term we're in a bit of a sideways consolidation. So even in that shorter term, looking at a sideways consolidation, we are overbought, maybe a bit of a pullback, but because of that longer term trend bias, I'd still like to keep a long bias to trades. So we're looking at where this pullback takes us. If it does, these two candles here at the top, that green candle followed by that red candle is a bearish reversal candlestick pattern, somewhere between a harami and a dark cloud cover, if you want to give it names. But it's really just showing the price is ticking back after just breaking that high and then now coming back below that level. So initial support target somewhere there about 16,750 odd, or maybe even back down to that 16,530. But again, this is not for me a signal to short, but it is an indication that, well, maybe I can accumulate this index at a slightly better level. I'm waiting for it to pull back, that pullback to end with the price ticking back up, a bullish candlestick pattern or something like that. You do have the scenario where you could get an upside breakout and it just continues. For me, I'd prefer to, even in an upside break scenario, wait for the first pullback from that new high. At the moment, we did make a new high, and so I'm hoping we can get a pullback from this high to find that long entry from current. Now, if we move over to the FTSE 100, This has been conforming quite nicely to our levels over the last little bit. We've had this, trading between this 7,700 level does seem to be quite relevant. The price has found some resistance there at this point in time. We had a nice bullish reversal of that 7,400 level. We've had a nice rally back up to that. We looked like we were reversing a little bit before. That's been negated, but we do have another bearish price reversal. If I just zoom in there a little bit, the red candle, which has followed that preceding green candle. And again, that's somewhere between a dark cloud cover and a bearish harami type pattern. And it is a bearish candlestick pattern, bearish reversal off resistance and from overbought territory. Now, this market environment to me is different to what we've looked at with the US indices and with the DAX, and that this is a long-term sideways environment. So longs and shorts for me, I'm happy to take either side depending on where we are within the levels. I think from here, initial target, you've got to look at these lows because it's providing something here. Initially 7,595, but we start closing below that, then we'll retarget and move back towards that 7,410 mark. In that situation, the traders might consider using a stop as a close above that 7.7 level as a possible stop loss indication. Looking at some commodities, starting off with Brent crude. Now, Brent crude is in a broad sideways environment. When we look at it, we had a very strong rally. That rally was quite nicely topped there with a bearish engulfing candle pattern. Just where my mouse pointer is, we had a strong pullback from overbought territory, and now we have had a bullish reversal off the $76 per barrel mark on Brent. And that bullish reversal has been accompanied with a move out of oversold territory. So if we look at this candle here, this one that looks like a cross, it is referred to as a dragonfly doji, and that was an intraday reversal. You see the price closing closer to the high of that session rather than the low of the session, marking at least a short-term end. Candlesticks which have followed, or the next one, just shows you that there is some momentum to the upside. So initially our reversals about 2 days ago confirmed. So probably from about 78.60 would have been a good entry point on that. I think if you're not long on that, if you were, certainly you could start looking at trailing stop loss below a 1 day low, 1 or 2 day low. That's depending on your threshold for risk. I think our initial targets here are sitting somewhere between $80.60 per barrel and $81.35 per barrel. If we can get through that, then we start looking at about $82.75 per barrel on Brent crude. Now, spot gold is trading within a tight range at this point in time. We've had some nice candlesticks marking the tops and bottoms of this range at this point in time. I think that narrow range is in between $2,010 per ounce and $2,060 per ounce. So we like to trade the habit of that share, of security, whichever one it is. And we've had this bearish reversal, moved quite nicely to support. We've had a bullish reversal, moved quite nicely to resistance. Had a bearish reversal again, move lower. And this is a bullish reversal here, but it is quite tight because it's actually sitting in the middle of that range. So a bit of a tricky one at this point in time. For me, preference is to trade closer towards those levels and reverse off those levels if we're looking at a range trade type scenario. So bearish reversal of resistance for a short trade, bullish reversal of support for a long trade, or alternatively waiting for breaks of those levels. So instead of getting the reversal, you see the price breaking and closing below. I personally like to look for closes. Let's see where the price settles. We had a close below, then I'd suggest that 2010 mark, move back towards 1970, close above 2060 suggests a move to 2080. But that hasn't happened yet. But when you're in a range-bound environment, there's two ways of trading that. One is trading between the levels or waiting for breaks of those levels, which is exactly what we're doing. Unfortunately, gold is hovering in the middle of that range right now. So we're waiting for better opportunity to manifest within gold. Now, platinum, also one of these range-bound price environments which has been conforming quite nicely to our levels. We just want to extend that level there, that 940. Last we spoke was a bearish reversal around that resistance level and from overbought territory. And we were targeting move back towards that $875 per ounce mark. Now we have had a move. We haven't quite hit there. We've hit about $880 per ounce. And we do have a bit of an intraday reversal forming today. Still a long way to go for today, but see that price at long lower wick suggesting a bit of a price rejection there, but certainly one to watch. If we can get a strong close here, we see the price closing above the halfway mark of that preceding candle, then I'd say we'd have a bullish price reversal in play, and we start targeting to move back towards that $940 per ounce. And in that scenario, we could look at having a stop loss on a close below either the reversal low or that $875 per ounce mark. Right, that's all the charts from me. I'm Sean Muriton, a senior market analyst at IG South Africa, and thanks very much for watching.